Welcome back. Let's get to the markets. Now we have Willie Bong with the details. Great to have you, Will. I'm sure you saw those POS charges, at this point. They're really high.
They're really high. I'm sure really somebody's making money somewhere. And it's probably, bouncing up to the equities market,
And
Someone's investing that money somewhere.
The annoying part is when you get to the bank and you're trying to, go use an ATM. And the next thing, the security man is like, are you doing transfer or this? I'm like, no, I want to use it. He said, no, it's not, no money there.
No money.
That's always what I get.
And then you wonder that you say about over 90% of the money is outside the bank. So why is there scarcity of this currency? Why do we have to buy our own Naira? It begins to look like we're buying the Naira in our own country.
Yeah, we can't have that.
We can't have that. No. So the authorities have to look into it.
The issue is already a lot. We can't.
Yes. We can't deal with this.
Cash is another issue.
We don't need a lot of cash. We just need cash to run around. So make it available.
Cash, yeah.
So we're just going to kick off with the markets. We're checking in as always. Major equities in Africa where sentiments were mostly positive as in today. We see Nigeria's NGX all-share index coming up with another new high, surpassing 89,000 points. Any moment now, probably nearing 90,000. Let's not. It's not far-fetched. 90,000 is right around the corner now with the rate at which the NGX is really going. South Africa's JSE on the flip side traded down at intraday 1.32%, down to the 72,000 points. Now let's look north and see how that traded. In EGX 30 at intraday was up 0.3%, is still on that bullish run, 27,000 points now. Any moment now is trying to catch up with the NGX. Kenya, however, closed yesterday's session, that's Tuesday, in the red. Now let's get a deeper sense of what's happening at the NGX at intraday with Ambrose Omodion, Chief Research Officer, Invest Data Consulting, why the NGX is at having this frenzy, why the investors are trying to, make sure stocks don't even remain on board. Good afternoon, Ambrose. It's good to have you on the program. Ambrose, the NGX all-share index has crossed 89,000 points and is nearing 90,000 anytime now. This is definitely history at the NGX in a space of 11 trading sessions, maybe more. But this year, we've seen this happening. Can you just tell us what's happening, Ambrose?
Yeah, actually, I would say that the investors in the market are already bullish. But one thing is very, very important that we saw the rally coming from 2023, where the market get about almost 45.9% to close the year. That trend, extended into 2024. And also, seeing that the inflation figure that was released recently, to the market shows that most of the other investment windows are still returning below, the inflation figure. That means their real return is in red. That also trigger more, buying interest, in equity. Knowing that the earnings season is around the corner, then you can make, above what inflation is doing in less than, 6 months or less than 6 weeks. That's also the attraction in the market, as to speak. But I will also advise that investors don't be carried away with this uptrend or this upbeat, because anywhere in the world, market will not remain in up direction. That means opportunity for those that are designing to take profit in the market now. As you just mentioned, market has crossed 90,000 mark today. For me, it's a good sign that market is still very strong. For investors, you know how to cash out their profit, either slowly or the percent that you want to do. Because if you are trading your plan will tell you what to do at the right time, because you have your buy range, your stop loss, and your profit target. Don't allow the market to carry you up and break you down. That means you are just following the bandwagon in the market. You must invest intelligently with strategy. For me, any season is going to create wealth for investors. But don't forget that the trend we are seeing across the globe is signaling that the market might likely change any moment from now. If you are seeing that the geopolitical tension around the world has also triggered form of a return of inflation in a mature economy, that will soon, in later distance, start reflecting in also emerging market. That means investors in our market now that anything around corner, know what to play at right time, because those blue chip companies, the price they are selling with the earnings that coming to the market to support that price. Today, one of the companies that started kick off the market earnings for Nigeria is Infinity Trust Mortgage Bank. The number came very impressive. But if you look at the earnings per share for the full year 2023, a 7 naira stock, giving you a full year earnings per share of 23 kobo. Fine. It can tell that they've done well from 14 kobo to 20 kobo. But will that support the 7 naira? This is what investors should be looking at. Supposed to expect more results between now and 31st of January. They will give us more insight what to do between February and end of 31st of March. For me, investors should trade with caution at this point yes, it's good that market is very upbeat at this time, but don't be carried away with that up market.
We'll definitely, well, investors, I'm sure, will try not to be carried away and know when to take profit. But we're talking about the stocks that are actually driving this the movement right now. We know that the banking stocks did their thing about last week, but we're seeing conglomerates now bringing their A game. So what is happening with the conglomerates? Are you saying that all sectors are not pulling in their weight to drive the market up?
Yeah, for me, like what you just said, the consumer goods or the manufacturing sector is surfacing with a uptrend now. For me, investors should think with caution in that regard because nothing has changed in terms of effort that put most of this company in loss position in their Q2 and their Q3, and we're still having that same FS problem. Unless we're telling that the stock has been undervalued as speak. But if there's no number for it to relate to where they are going, unless tomorrow we'll not see the inflation start coming down, Nigeria purchasing power change. But if the same sector you are producing what is on the shelf, I don't expect them to put a number that will be very fantastic. That's why I say you have to treat this market with caution. It's good that as you can see the life of even the Nigerian breed that are put all of them are in green, which is good. But for those that are in what we call industrial goods, the cement industry, the life of Boa, the life of Dangote and the Wapu, yes, we can see that yes, because we're entering a new year, the government also wants to drive infrastructure. But for those manufacturing sector, you have to treat with caution because cost of production is high because of what they import their raw material, exchange rate is high. For me, and also people consumption also start drinking already before now. That means if you are consuming, let's say, for say 2 tins of milk, now you are reduced to 1. That means most of them will remain on the shelf for these companies. For me, this number we are seeing will not support the price of this manufacturing. So that you don't expect a good dividend to support the price, especially for that sector because their numbers are not looking up the way I know from your Q1, from their Q2 and Q3. I don't see overnight in Q4 because of festive season to change their numbers. No, because we have seen that they have been red for 2 quarters. For me, trade caution with all those counters.
Okay, so earnings season is right around the corner. You said Infinity Trust Merchant Mortgage Bank is already dropping its impressive results. What is your outlook for other expectations for other companies that were going to release their results?
Yeah, for me, this financial company, the mortgage company, that means this is a signal that all those banking stock were expecting, insurance company also receive better number from there. But the price and their earnings determine what to come to invest. So we have seen obvious from this one that no matter what they're going to pay, we'll support the price. But for those banks that have done well, insurance that are priced are relatively low, and also if their number come and beat expectation, those ones further, we can still further go up. But for now, trade this market with caution. That's what I would say for every investor in the market, both the traders, trade with caution, and also know when to take your profit because market will not send the day it's going to come the other way. That means as a trader, as you're trading your plan, you know when to take your profit. But if you fail to take your profit, market will take it back from you.
Ambrose, you've just been throwing caution. So investors have to that's the watchword and very key word here. The market is like a bubble right now and can burst anytime soon, any moment from now. So investors really need to know when to take profit. Like you say, trade, know your plan. I mean, trade your plan, know your plan, trade your plan, that's it. And just make sure that you stick to it and make profits when you need to. So what do we see? Definitely the market is going to close in the green. So what do we expect? Do we see more stocks crossing to the 1 trillion naira market capitalization?
It's possible, but one thing that I will send you a signal this afternoon is that look at the numbers of stocks that are in red compared to the last 2 trading days. I've seen that today we start about more than 20 to 22 stocks in red compared to other days we are seeing just only 4, 5, 9 stocks in the user chart. Tell you that people are really taking. That means banking stocks today, I think that most of them have slowed down in that rally. For me, investors will just start patient. But for those that are yet to move, yes, they might go up because of we expect their number to fall. At this point that the market is, yes, it's good that other investment windows are looking down in terms of below inflation. Equity markets are ahead of inflation. We agree because year to date, we're already seen about 17% return or even 20% return with what we are seeing today. That tells you that there's potential in that market. But in all this, trade with caution, that is what I'm saying. Not that the equity market is good, no good area at this time. Because the peak where it is now, all the indicators are that the market is at overbought region. And when market is at overbought region, the next thing you see is correction. But if market is at oversold region, next thing that you see that market start going up. Now that it has gone to this level of overbought region, the next thing you see that market will correct. It might not be as bad as what we saw in 2008 because the fundamental and the scenario are different, but market must correct.
Definitely, market is overbought, needs to correct. Thank you so much, Ambrose. It's always good to have your perspective.
Thank
So
you.
look at other markets, especially major equities in the Middle East, where they traded mostly negative at intraday. We see Abu Dhabi is down 0.22%. We see Dubai also trading down 0.2%. It seems that it's a bit of red for that region, but let's see which stock exchange gained in that region. See Saudi up 0.07%, the lone gainer in that region, and Qatari index is down 0.92% at intraday. Let's see in the U.S. We're seeing stock futures were lower in pre-market trading, extending losing session to kick off the holiday shortened trading week. Futures tied to the Dow Jones Industrial Average dropped 0.62%, S&P 500 0.37%, and Nasdaq 0.19%. Of each of them, we're seeing they were dropping. The steam from the fourth quarter earnings result is not able to hold, investors' interest for these markets, and that's why we're seeing that drop in that segment. So we'll continue to probably see more dips for the U.S. markets, pending what decision the Fed takes, either to hold rates or to hike rates. Investors are already, looking through results from major banks, including Goldman Sachs, Morgan Stanley, and the Bank of America. And we've seen that some impressive results coming out there. But let's check out yesterday's close with our correspondent, Maria Bird.
The U.S. stock market had a tough day on Tuesday, as the Dow Jones was down at 0.62%, the S&P 500 down at 0.37%, and the heavy-tech Nasdaq down at 0.19%. The Dow Jones took a major day hit as Boeing took a 7.9% fall. This is causing many investors to be concerned about the stock market for the next few days. This 4-day week may be one that's troubling for many, as it's also clear that many investors are watching to see how the retails will close on Wednesday. This could mean some upward swing for the economy, or it could be a long story for the U.S. stock market in the days and weeks ahead.
Thanks, Maria. Now let's look at Asia's market. Let's see how they perform. I can tell you for now that it was red for that region. Japan's Nikkei 225 extended losses for a second straight day after torching 33-year highs on Monday, with the index slipping 0.4% to 35,477 points. Now, news coming out from there says China AMC Fund Management will reportedly and temporarily suspend the Nikkei 225 ETF fund trading on Wednesday due to high premiums. Now, South Korea's Kospi was also down 2.47% and to end at 2,435 points. It's the lowest since November the 14th, while the small cap Kosdaq dropped 2.25%. Hong Kong's Hang Seng Index plunged nearly 4% there, and this is the lowest level for the HSI in 11 weeks, while the mainland Chinese Shanghai Index, if you see that very quickly, also fell 2.09% after China's disappointing fourth quarter GDP report. Now, according to China's National Bureau of Statistics, the country's economy grew by 5.2% in the fourth quarter of last year, missing economists' expectations of a 5.3% growth forecast. Now, China is still contending with major challenges from deflation pressures and the property crisis as the year kicks off, and with investors overwhelmed so far by policies to keep economic momentum going. Now, in Australia, we see the S&P ASX 200 down 0.29%, falling for a fourth day. And now we also see the Shanghai Composite, as I mentioned, down to 2.09%. Now, see the markets really down for Asia. We hope that there's a rebound in tomorrow's trading session. But, Laddie, I don't know if the other regions, other parts like Germany has got better news for us.
Yeah, so we'll definitely be looking out for these markets, because at the end of the day, we're seeing the GXs. That's talking about the NGX and the EGX, the EGX in Egypt, doing really well. In the first trading weeks of 2024. So it's looking quite good for them.
Competition
so let's
for
see,
them.
If Asia can, keep up.
Especially
with these
with
markets.
Inflation,
exactly.
rising in the UK unexpectedly.
Right.
We see if other markets outside the country, outside this continent, are able to, keep up.
Yeah, definitely watching out for reactions. Thank you so much.